Okay, that's the word coming in from Naika. Good set of numbers, but let's move from makeup to homes. Macrotech developers posted Q2 earnings yesterday. We got the operational update a few weeks ago and it was very good. The company clocked in its best ever quarterly sales, which takes sales for the first half to around 6,000 crores. Remember, the company's full year guidance is at 11,500 crores. Sushil Kumar Modi, the CFO of Macrotech Developers, joins us now to talk about that. Mr. Modi, good morning and thanks for joining in. Since you've done a little more than half of your full year guidance in the first half itself, would you want to scale up your guidance for FY23? 11,500 crores is your target. Do you think you can beat that?
Hi, morning, Sonia. No, your point is pretty valid, that looking at the strong, robust demand and the kind of performance that we have achieved in the first half, certainly, we are on the journey perhaps to outperform our own guidance. But nonetheless, we are equally cognizant of some of the macro developments that are happening all around us in terms of interest rate and whatnot. And henceforth, to that extent, we would equally like to be cautious before kind of, rather instead kind of outperform our own guidance rather than kind of keep revising the guidance at this point.
So even if you don't revise the guidance at the moment, do you think that by the end of the year you could do much better than this level of 11,500? Jefferies has put out a note where they say that a 13,000 crore sales target by end of FY23 is reachable. Would you agree?
We definitely agree, and in our mind, potentially, as I said, we would outperform the number, but I wouldn't get into the specifics of how much of the outperformance we should finally get to. But nonetheless, you can just simply, take the clue from the fact that generally the second half of the financial year, due to festivities in and around the country, delivers kind of 60% of the business. So if the 6,000 crore has got delivered in the first half, it is no-brainer perhaps for all of us to recognize the kind of potential and thereby the outperformance that we all would end up in achieving.
So you're not revising it officially, Sushil, but you also agree with Jeffrey's target, right? As of now, that sounds realistic.
Yes, I would say realistically one can definitely.
Right. Okay, we let for the time being, we'll stick to the guidance that you have given, and maybe by the time we meet for the next quarter, maybe you'll revise it going by the traction that we're seeing on ground. But pricing is important as well. So tell us, what is the average realizations that you all have? Point number one. And also price hikes have come about, right, in the last 1 year or so. Do you believe there is scope for further price hikes from here on?
See, I think we are into an industry where the price hike is absolutely essential. But equally, the fact is, the price hike at no point of time should end up in kind of impacting the affordability, because which is where the industry starts suffering. And that is why the strategy that we have adopted, and kind of, quite a number of times we have elaborated as well, that we would like to ensure that the price rise at no point is kind of, exceeds the wage growth in the country. So if whatever is the wage growth, potentially the price rise should only be 100 pips lower than the same. And so long that is there, that means the affordabilities continue to kind of improve quarter on quarter and year on year, and which thereby enables, the housing demand to unfold, because we clearly see there.
Yeah, Sushil, I'm looking for a number, Sushil. What is the average realizations that you all are currently sitting on, and then we can take it forward?
So effectively, we have achieved, our realization effectively is kind of 11,000 to 12,000 rupees a square feet on an average, because as you would appreciate, the number as such really won't matter, because we cater to the affordable segment, to the luxury segment, and the price kind of, varies significantly, So henceforth, on an average, if you look for, then potentially the number is somewhere around 12,000 rupees per square feet. But what is important to your point is that, yes, in the current half itself, we have seen the, across our project, 2% price hikes, kind of round about 2.5% across the project, and that is in the first half. And coming festivities in October, we are clearly seeing potentially, another 2% kind of a price rise that should get in now, depending upon project to project.
Sushil, just stay with us. Just want to point out, Piramal Pharma, I think it's up 5%. I think started okay, but now it's surged to the high point of the day. I'm not sure if there is a 5% circuit.
Yeah, there's a circuit. Tomorrow it comes out of T2T.
T2T. So that's something we were highlighting earlier in the morning as well with the pharma analyst, but 167 on Piramal. Sushil, so all of this is fine. We spoke with Prestige Estates. I mean, of course, cater to different geographies, right? And then real estate at the end of the day is one geography can be very different from another one. But one of the things they highlighted was that, you got to start a project, you got to put it together, get approvals. So you got to have inventory, right, to be able to launch projects at the same pace. And they kind of hinted that is a bit of a challenge. Demand is not a problem. Affordability is pretty good. Price hikes are being absorbed. Is that something that you would kind of agree with as well in your markets?
Not really, actually, and in fact, to prove a point, actually, in the first half itself, we have launched 8,000 odd crore of GDV in our market, which is primarily MMR and Pune at this point of time. And we currently are having a pipeline of another 10,000 odd crore of new launches to be happening in the second half of the year. And that is where the strength of our company and thereby the ability to deliver the robust pre-sales growth, quarter on quarter that lies in front of us. And obviously, equally, it is a function of you getting a reasonable amount of your raw material from quarter on quarter, and to that extent, as you know, out of the consolidation that our industry is seeing, the kind of new projects under our capital light business model of joint development arrangement, we added in this financial year up till now, in first half, 9,000 odd crore of JDV. And since our listing in 18 months, we have added around 24,000 crore. So that shows the strength of brand Lodha, both in terms of getting its raw material and demand in any case for the tier one offline players like Lodha. In any case, I think we all are seeing it on the ground.
So you said that there is a 10,000 crore pipeline of launches, but in the second half of the year, can you tell us how much of that can you realize? I understand that you added 4 projects in Q2 with 2.2 million square feet of saleable area. How much of all this can you realize in the second half of the year?
See, typically it depends upon the month of the launch, right? Because the launches happens across effectively every month. So generally our target on any new launch is to get to around 30 to 40% of the sales of the launch quantity or launch value in the first 6 to 12 months. So depending upon the timing of the launch, some of the sales will get delivered, but nonetheless, yes, anywhere between 10 to 20% of this 10,000 crore is definitely on the card.
All right, Sushil, very quickly, you all have done phenomenally well in bringing down the debt, and kudos to you all on that. But you have a big pipeline now, you talk about new projects, etc. What would the peak debt levels be for the coming year? That's FY23 and FY24.
So our peak has already gone by, right? So we are in the journey of reducing our net debt. And to your point, this is kind of a Goldilocks scenario that we are in, where we continue growing our business significantly and in parallel, in tandem, continue deleveraging, which is not quite often that you hear, and that is why the question that you have raised. So our capital light business model of joint development arrangement enabling us to kind of not put any significant capital in terms of acquiring raw material, yet achieve a significant growth and deliver pre-sales growth of 20% plus CAGR on a long-term sustainable basis. What we have guided is what we are currently on in terms of our journey. So we are pretty much on track to deliver 1x of our operating cash flow as a net debt, and thereby meaning our net debt numbers you will keep hearing quarter on quarter keep going down. And perhaps in next 2 to 3 quarters, start absolutely tracking our guidance, which is 1x of our operating cash flow equivalent and 0.5x of our equity.
All right, we leave it at that. Thanks a lot for joining in. So that's Macrotech developers. The stock may be under pressure, but the management commentary is quite positive. They do say that they will exceed their full year revenue guidance of 11,500 crores of revenues for FY23. They say a 13,000 revenue target for the full year is quite possible. But the stock has seen some profit taking lately. Let's do one thing. Let's slip into a quick break. Up next, we'll connect with Arun Selvan D, the president and CFO